Hello, everyone. Welcome back to How to Trade in our Switch Markets live community. Today, we're going to go ahead and do a live trading webinar. We're going to look at some trade ideas. We're going to break down what's going on today in the crude oil market. We had a banger, an absolute banger that we released a little bit earlier in the market. Pretty much went straight in our favor. Now we're sort of hanging on right around that 65.30 area in U.S. oil. I'm going to talk about that. We're going to break that one down. We're also going to look at gold. We've got to look at our gold 920 signal we got yesterday. We've also got to look at the Swissy. The dollar Swissy tested our key level and has rejected that level. NVIDIA. I get a lot of questions about NVIDIA, so what we're going to have to do is we're going to have to go ahead and take a deep dive into NVIDIA stock, talk a little bit about where we're at least with regards to the 920, and we're going to throw some Fibonacci's on there, and then we're also going to go through a few other things, a few other concepts that have to do with trading the news, trading news events. We're going to look at the news of the day, and then we're going to look at some key levels and potentially make a few trades. I'm also going to show you how to use one-click trading on your MT5 platform. I think it's absolutely important. I got a great question not too long ago about MT5 and that one-click trading. Shane, I don't see those buttons that you have on your chart. I'm going to go ahead and show you how to line those up today as well. Also, if there's any questions you have, today's a great time for them. This is a live trading webinar. That means all things trading. That's what we're going to attempt to pass along, a little bit of knowledge. And that's not just trade ideas and key levels, but it's also how to evaluate the news, how to read the news, and also a key event came out in WTI crude oil that has brought an incredible amount of action to the market, and I want to go ahead and cover that as well. So I want to welcome everybody back. It's good to see you, T. Marina. Good to see you. Happy hump day, everybody. Absolutely right. Happy hump day. It's Wednesday. I love Wednesdays. Always a great time to be trading for me is Wednesdays. Tuesday, Wednesday, Thursday are my favorites. They may not be your favorites, but there's a lot of participation and absolutely a lot of folks in their trade, and that's all we need really to make money. Lita, good to see you. Lita, Alan M. Hi, guys. How you doing? Tuku, good to see you, Tuku. All right, guys, I'm working on two different live chat streams, so if I don't get to your question right away, don't hold it against me. I will get to it eventually. We're going to shoot for, however long the stream goes is however long it goes. We're here to do the job, so let's go ahead and do it. Like I said, any and all questions are welcome. That's the biggest thing we want here is engagement. If you have a question, ask me. All right, we got one from Dave. Dave, F19, good to see you, Dave. Hi, Shane. Your new orb with Fibonacci at 62% worked really well on the NASDAQ today. Double exclamation point. Well, right on, Dave. Fibonacci retracements are big for me. I know I've bored most of you guys over the years. You're Shane, I don't like Fibonacci's. And I go, well, you ought to consider them. I mean, the fractal nature of the universe in general and the power of that Fibonacci, that golden ratio and those Fibonacci retracements is unbelievable. And when you compare it with an orb, potentially enter on one of those levels with the direction of price action in an orb, I really see it being a very powerful way to trade flat markets. And guys, right now, you have a break in the NASDAQ, Dave, so it looks to me like you got a pretty good, but you're up about 1%, so that's always positive. But, man, the Dow 30 and the S&P 500 are dead. Dead as fried chicken. They're just moving sideways. So if the market changes on us and we're trying to trade breakouts, an opening range breakout, then we've got to be a little bit smarter than the average bear, and we got to say, okay, what can we do with our entries that give us an opportunity to trade? And I gave you two ways. One was the 50%. The other way was the Fibonacci's. I'm partial to Fibonacci's, but a lot of folks really love easy. And easy is 50%. Volume's too low. Volume's too low here today, but shouldn't be. I should be up and rolling here. I'm showing that I'm all turned up, ready to go. Maybe try that out. I don't know. I should be good. I don't know if you guys can hear me great. If not, that's okay too. Let's see. Yeah, we've got our volume up. All right, guys, let's go ahead and get on with the program here. A lot to go over today. Absolute lot to go over today. We might have another little dial we can turn here. All right, try that. That should be loud enough. If it's not loud enough, I'm sorry. Then that means something's wrong. That's for sure. All right, everybody, here we go. What I want to talk about to begin with is really a trade idea of the day. Remember, if you want to trade any of these things, go on over to switchmarkets.com. You can get in there and really kick the tires and see exactly what you want to trade. Thousands of markets, zero spread accounts, zero commission accounts, bonuses. They got it all. So go over there and check it out. If you're an international client, if you're in the U.S., be sure to reach out and I'll see what I can do for you. Okay, week 32. Today is all about EIA crude oil inventories, hence our trade of the day, which was going to be in our EIA. It's not really based on the EIA crude oil inventories, but it's definitely going to be one of those that is based on action and participation. And right now I'm watching U.S. oil go absolutely crazy. I'm going to sort of give you a teachable moment here. And it's always tough to put these trade ideas out, but we're going to go through it. Remember, Tuesday, Wednesday, Thursday, psychology, all systems go. We trade to hit our weekly P&L goal. We trade our plan, and we get in after it. Focus on our execution, cash in on opportunity. If our strategy says trade it, we trade it. Ride the momentum. We're looking for profits. These 72 hours, this is when we make money. It's time to trade, and it's time to build the account. Right here, this is our trade update. This is the trade idea that we put out earlier today. Now, it's a pretty good one. I mean, I was very happy with the performance of this trade. It's back down to about 65, but we had 64.79 bids from that long-term level in U.S. oil that I talked about yesterday, and I really was surprised that it was going to come into play today. Let's go ahead and see how it went. So we're looking at 64.79s, and you can see we came right down to that long-term macro zone. We had a bit of action against us right there. Price went down to 64.63, and then we got the big 30-minute rally up to 65.65. So we fell about 14 ticks short of our profit target here. Now, I'm going to walk you through everything, and we're going to talk about the psychology of a trade like this because it's really difficult. One of the challenges with being an active trader or a trader is understanding that you don't know how far the market's going to go. You do not know how far the market's going to go. I don't care what anybody says. There's a lot of folks out there that use Fibonacci expansions. They use momentum oscillators. They use all these different tools and all these different guidelines to say, no, I have a pretty good idea where this market's going to go. That's all hogwash. I will argue with anybody. I will argue with anybody that says, okay, listen, I can hit with extreme accuracy where a market's going to go. I go, that's great. That's fantastic. If you can do it consistently, good luck to you. What I've done over the years is I figured out the biggest weakness of my psychological game as a trader was to try to hold out and call the market exactly. It's really difficult to do. It's very difficult. As a matter of fact, when I was first trading, when I started trading with Top Step on that prop firm back in 2012, 2013, there was the head of the company over there was in the room with the traders. Like it was Patak was the gentleman's name. And he made a great point. And they would come over the squawk box, and we would be in a room, and you would have a squawk run, a live squawk. And the idea would be real simple. They would tell you things, give you tips during the trading day that would help you out. Well, one of the things I remember, there was one day where the traders were all losing money because everybody was playing breakouts on a flat day. And the idea was very simple. It was like, make sure that you don't have to be right to get paid. You're trying to be right. You're not trying to make money. I try to make money. And part of making money is being able to manage my expectations, not just before we go into a trade, but on the fly. And in a trade like this, where we just went over this, 64.79 was the buy. And I put down 100 pips for 65.79. Now, personally, I think we're in pretty good shape to still get that 100 pips before we sell off and, excuse me, maybe go down underneath 63.79. We're trading 65.15 right now. We should have a legitimate chance at trading up a few ticks and getting our profit target. The biggest thing that I have, the biggest issue that I have with traders that are 1 to 4, 1 to 5, 1 to 6 traders is that they sit around and they wait. And they say, no, it's okay for the market to go in my favor and then pull back because it's going to make another leg up. Well, sometimes it makes another leg up. Sometimes it doesn't make another leg up. One of the first things that I taught, one of the first lessons, and this is a good place really to begin our webinar, one of the first lessons I was ever taught is don't make a winner a loser. If you make a winner a loser enough times, you will not be in the market, and I'm a firm believer of that. In this trade, in this instance, in my view, we had a 30-minute break that went up and got a 65.65. That's 14 pips. That's 14 pips right beneath our profit target of 65.79. Now, one side of the argument is discipline. They're going to say you got to be disciplined. You got to stick in there and wait till your profit target's hit. The other side of the argument's going, are you kidding me? 30-minute chart, that thing just blew in your favor. What, 86 ticks? 86 pips? Take the money. Take the money and move on. I tend to go to the second school. Now you're saying, Shane, how exactly could you get the perfect 86 ticks where the market turns? Well, you can't really. But that's where things like trailing stops come in. That's where things like putting your stops beneath key levels comes in. That's where the idea of understanding that when a market rocket ships in your favor, odds are that it's going to pull back against you at some point, more than likely before you hit your profit target. So when we put a trade idea out, it's typically very simple. My next level is what we're looking for here. Typically, I design those as a one-to-one basis, meaning your stop loss is going to be what we're looking for profit target-wise. So if we're looking for 100 pips, we're probably going to risk 100 pips. That's just the way that I do it. If you wanted to wait and try to take a bigger move, You can certainly do that with these trade ideas, or you can take a smaller move. It's really whatever suits your account best. But for me, I can tell you right there, that price shot up to 86. My stop loss went beneath 75. I said, no, we're not going to I'm not giving this move back. I mean, that's a significant move. I'm not giving this move back. So that's essentially what I'm talking about. And I mean 86 pips, not 100 pips. So that's exactly how I manage that trade. I've never been able to get my mind around giving money back to the markets, especially when it blows in your favor and you're sitting there going, holy cow, this is easy. Well, it's easy until it's not easy. So if you held on to that position looking for 100, which you're more than happy, I mean, go ahead and do it. That's what the trade idea says. If you want to go that route, go that route. But what I'm saying is this, that big pullback right now, you're down to 65 even. You've given back a lot of money. And I hate to say it, but right now you're sort of hoping price rebounds and goes back up and gets it. And as soon as you find yourself hoping, it's not going to work for you. So for me, get what you're going to get paid. You don't even want to be in this game anymore. You should already be out on the sidelines. But you're saying, well, Shane, but it didn't hit the profit target. And I go, no, it didn't. But we've got to have some idea of how to manage these trades. And time's a big deal to me. When I see something blow in my favor and I go, okay, it looks like we nailed this one, there's no way I'm giving that back. There's no way I'm giving 86 pips back. We're at least taking 75 off the board, and we're going to keep on trucking. That's my own opinion on trade management. Timing's a big deal. As you're in these markets longer and longer and longer, you can definitely get good at managing these trades and making the right decisions. I can tell you that the two decisions that you have to make consistently is, number one, you have to cut off losing trades, and number two, you have to do your best to get your profits. Let's see, Catman, dude, good to see you. Hello, Shane. Hello, everyone. Let's see, we had a comment there out of Alan. Let's see, Shane, I took the 9-24-hour Great Britain dollar 132.55 stop at 130 entry. Demo dollars performing well. Yeah, we're going to look at the Great Britain pound as well. I sort of got sidetracked on that trade management. Let's take a look at another trade that we had out yesterday. Gold. Interesting, isn't it? There's your 920 buy on your gold market. Daily chart. Remember, these are sort of swing trades. Daily chart. We sort of had a flat day in gold. Still bullish. Still above our moving averages. We didn't get the big reversal. We're off a little bit, but not really that much. Your entry points right there, right around, 33.80 on that close. And what you're trading right now, 33.76. If, in fact, you're looking for that 3,500 and you're looking for that big swing trade move, I think that's going to be a pretty good one. So I'm waiting. I'm watching gold. The tariff action has definitely derailed a lot of markets out there, and there's a lot going on. See, I'm trying to balance two chats, guys. Let me see. Tina, good to see you. Tina, welcome. Thank you for all the kind messages yesterday. I appreciate that from all the traders. You guys feel free to head on over to How to Trade and send me a private message. I will get back to you. So let me see. Your opinion on the gold 1 hour, please. I have a long trade live. Yeah, sure. I'll look at that one, Tina. And the Euro USD, absolutely. T Marina, that's some self-assured hubris for traders to have that mindset about price. Hello, Shane. I logged in at How to Trade website too. Thank you, Joshua. Good to see you. Well, that's the thing, T Marina, is when you're sitting there and you're watching price jam in your favor and then it goes against you, and I know a lot of traders that'll sit there and go, well, that's just price action. That's just the way it goes, and they don't worry about it. And a lot of those traders make a lot of money. I'm not saying that mindset's wrong. I'm just saying psychologically for me, it doesn't work. I have to get paid. It's that old ZZ Top song. I got to get paid. I got to get paid. And when you see a market break in your favor like that, you got to do it. You got to take the money where you can. Thank you, Joshua. I appreciate that. All right, let's see, Tina. Let's go ahead and take a look at the gold 1 hour chart. Yeah, I mean, I can certainly right there. We're sort of bullish. We're still bullish on this daily. I really like price action and where it's at right now, right around 33.75. I think that's a pretty good, really a pretty good zone. If I was looking to trade that level. If I was looking to trade on the 1 hour, let's just take the gold chart right down to a 1 hour chart, and this is sort of my approach. This is what I do. I have my Bollinger Bands out there. I've got my 13-period EMA. I've got my Bollinger Midpoint. All those things mean something to me. Right now, the market extremely volatile yesterday. On the 5th, boom, boom, nice big move. We've sort of sold off back down into that range, and now we're taking off again. So if I was trading right now, if you have a long trade position on, this could be relatively, it could be tricky right there. That spike low. We could go right there to that spike high on the 1 hour time frame. The pullback I mean, you have an incredible amount of support right there at 33.7250. And well, let's see right there. Let's see, my Bollinger midpoint's at 33.7250. So you've got that convergence of indicators. That's what we want. We want that 38% lining up with that Bollinger midpoint. That's good. And then I've also got my 13-period EMA right there at 33.72. So you've got a lot going on there at 33.72. A lot going on. Right here, we've got a little bit of compression in the last hour or so. I would be watching that level relatively closely as being my indicator whether to hold the long position or not. If you get washed out at 33.72, you're probably going to have to regroup, maybe take a stop loss there, and then come back and look for maybe a trade later on today. But as far as your long trade, I think it's pretty good. You got the nice big run up here. There's a big sell-off. That's okay. There's nothing wrong with that. And then you've got that compression right in there. Nice compression. Now we're starting to come off a little bit again. We're not really seeing bullish action out of the US dollar, so I wouldn't really brace myself for the big sell-off as we roll deeper into the session here in gold. If I had to bet, I would say this thing's going to move sideways unless you get a big announcement, out of Washington, D.C., and boy, we've got a lot of them. So we're going to go ahead and check our live news feed here in just a second. But that's a pretty good look at the 1-hour gold chart. That's the area I would be looking at right there. We're going to monitor this for the rest of the live stream and see how it pans out. But your stop loss, it's probably going to have to be underneath 33.72. If you do see a wash out of this zone, more than likely you're going to trade down by probably another $5 or so, and that can get real expensive depending on your leverage. That can get real expensive. So that's for sure. Euro USD, yeah, we'll take a look at Euro USD here in a second. 33, let's see, 33.67, 75 is going to be, if you're long from there, that's fantastic. That's down there at the back end of the golden zone. So if you're long from down there, pretty good. That probably would be a legitimate stop loss, though, down in this area. You should get another leg up soon. If you don't get it soon, it could be very, very difficult, especially as we go flat going into the later in the session. So I hope that helps, Tina. It's sort of a challenging chart to look at. That's for sure. Let me see, Andrea. Good to see Andrea. Hi. The USDCAD is breaking lower. If price closes under the 13 EMA on the daily, would you sell? All right, let's go ahead and take a good look at that one. Let's go to the US dollar, Canadian dollar. What do we want here on the daily chart? I am partial to the longer time frames, which is cool. All right, so right here, there's a couple of things that we're looking at on the daily time frame. 13-period EMA, we've got right there at 137.50-ish. Big time number. Let's go ahead and throw some Fibonacci's up here just for sort of the love of the game and see where we're at. Spike low to a spike high. Oof. There's the compression. I mean, there's that beautiful scalp. That's the kind of stuff we really like to look at right there. 138.10 right off of 137.63. That's fantastic. Fantastic price action. I really like that. But the problem is Elvis is leaving the building and it's doing it quickly. One of the reasons why, more than likely, is probably because U.S. oil's fought back up to break even and maybe even that support zone, that long-term support zone. Maybe we're onto something that the institutional folks are looking at. Maybe they believe that WTI crude is going to trade higher from here. That's going to be a bearish market driver on this pair. The real question is what are the tariffs going to do? August 7th, everybody's watching. Canada and the U.S., Carney and Trump are sort of going at each other right now. So the trade war could definitely figure in to the equation. So if you're looking at the 13-period EMA, the 13-day EMA is being if price closes under the 13, yeah, I mean, you could definitely be looking at selling at that point. You could be. This right here, 137.27. You'll notice our Bollinger midpoint on the dailies right there too, 137.28. That's going to be a challenge. That's big time support. That's two indicators of support right there, right around 137.25-ish. And the other thing to remember is this. We are sort of going into fall seasonality with WTI crude. I'm sort of anticipating I'm expecting a big leg lower once we break that 74.50 area, or 64.50 area in U.S. oil. I'm looking for a big pull off in crude oil after that. And if that happens, then this pair could definitely rally as opposed to sell off. So I don't know that it's a big sell. I probably would be on the other side of this, meaning I'd probably be waiting for 62% down there at 136.90 and play a long trade from there. That's probably what I would be doing with the dollar CAD. I believe we had a trade idea out that had to do with our weekly, and it was something like this. Well, there was our weekly. We were going to sell up there at 140, but right in here on our daily, see, we really are attacking the last 2 weeks range. So 136.90. I love that buy. But if you wanted to sell it, you certainly could do it. Just be aware of 137.25. Be aware of that area right down there. All right, guys, we got our trade update done and finished. We've got sort of a few things that we need to tidy up as far as news events go, and then we'll get on with all your other questions that you may have. I'll do my best to look at them. We'll take a look at that Euro USD here in just a second. The news of the day, 30-year mortgage rates. I always monitor these each and every Wednesday morning. That's absolutely huge. I like to make sure that the long-term lenders aren't doing something that I'm not ready for. And what you do is you look at the long-term rates, the 30-year mortgage rates. That's what lenders are preparing to put on the street to individual borrowers. And, from sort of a big picture, what does that mean to us? All we're trying to do is figure out where the institutions are going to tip their hands at. That's it. So the big thing that we're thinking is, okay, if the institutions start cutting interest rates on your MBA 30-year mortgage rates, those are the big lenders. Those banks get the money from the Fed, and then they turn around and lend it. Okay, we got that. As it goes down, we're expecting dovish policy sooner rather than later. So we're starting to see mortgage rates come down in anticipation of the rate cuts here in September. We covered that yesterday. We'll cover that again probably tomorrow. But your mortgage applications are big. You're up 3.1%. That's pretty big. So that shows there's a little bit of interest there on the buying end of things. But what else can we really be thinking here as far as game planning? We're probably looking at a weaker U.S. dollar. Now, does it develop right now? Probably not. We're going to be looking at that more along the lines of early September, probably after Labor Day. I expect the markets to be flat this month. I really do. I think we're going to go sideways. But, man, as we get into that key Fed meeting, anything can happen. So be aware of that. That's a peripheral metric. Crude oil, though. Crude oil, I'm a crude oil specialist. That's sort of what I do. And we had an interesting report today. We had negative 3.09 million. That's sort of interesting there. You've got 0.200 million, which is 200,000 barrels. So we had a big-time draw on supply here. And one of the bigger things that sort of jumped off is really how low our crude oil imports are becoming. We're starting to not import it anywhere near what we did last year, was about 9%. So now we're starting to fall back on the U.S., not necessarily refining capacity, but production. And what we're really looking for is an uptick in those supplies, and we're not getting it. So just to really show you how to read the petroleum status report right there. Third paragraph, you can click on this on the EIA's website. The third paragraph is going to tell us everything we need to know. U.S. commercial crude oil inventories, excluding those in the Strategic Petroleum Reserve, decreased by 3 million barrels from the previous week. At 423.7 million, U.S. crude oil inventories are about 6% below the 5-year average for this time of year. So we're still running a deficit here in our crude oil supplies. That's key. That's absolutely key. That sort of shows us that, maybe there's going to be a shortage as we roll into those fall months. Remember seasonality. Seasonality is big for crude. Typically, as we go into the fall, we see bearish pressure take over. Why? Traders are anticipating lower demand for refined fuels in the winter months. Remember, we always price crude oil and commodities what they're going to be worth at a future point in time, not what they're worth today. Always remember that. So when we take a look at a report like this, the biggest thing that everybody's watching right now is the 5-year averages. The weekly numbers, they're sort of a big deal, but we're looking at the 5-year averages, still 6% beneath that. That's not good. That's not good. So if we pull up our graph, this is sort of your weekly EIA crude oil report, and it's up, it's down, it's up, it's down, it's up, it's down. It really, this chart doesn't mean much to me. It really doesn't, but it does show you that, we had a lot of negative action back there in June, and now we started to get the bills, negative, positive, negative. I mean, we're all over the map on our supplies. There just isn't anything there for us to hang our hat on with regards to what really is crude oil. Where's it at right now? We don't know what U.S. supply is doing. We know imports are way down. We know refining capacity is way up. That's one number a lot of folks look at. Let's see. Gasoline inventories are falling. Summertime demand, that shouldn't worry really anybody. Gasoline production's down. What about, weekly refinery utilization's up. That means they're firing up the refineries, and they're trying to refine more oil into gasoline to keep those prices low. But it's a nasty cycle right now. The oil supplies are low, and if you're creating more gas, I don't like it. I think that's the only thing that's sort of keeping a bottom right now in WTI. I mean, I've been waiting for this sell-off for a long time, and it hasn't really developed. All right, let's go ahead and take a look at our MT5 chart here over at Switch Markets. You can see we had a question earlier for the Euro USD, and I'm going to go ahead and look at that. You'll notice the daily. We don't need all the fancy indicators to do this type of stuff. We can just try to read price action, and that can work very well for us. If you're a smart money concept trader, if you're an SMC trader right there, that order block up in this zone, up in that 117.50 zone, is probably a pretty big one for the Euro USD. Nice breakout today, up about, 0.5% or so. That's key. And then you also had a nice breakout a few days ago, compression, break. So we're still fairly bullish here on the daily time frame. Now, are we in a trend, though? Are we trending? On an intraday time frame, yes. And over about the last few days, I would call this a pretty good trend because you broke out two real small daily ranges, pulled back, and now we're breaking out again. That suggests that we're in the midst of at least a short-term bullish trend. All right, so let's go ahead and take a look at it on a couple other time frames. 4-hour chart. Euro versus US dollar, you can see we're pretty much trending. We had the nice big move, and then we traded sideways. Remember yesterday, we sort of outlined that as being an ascending triangle. Well, there's the break. There's the break. So a lot of times chart patterns are fairly reliable, and I'll draw these on TradingView in just a second. But which way could we really be trading this? 4-hour chart, we're probably going to have to wait around until at least the Tokyo session to get a trade. You're going to be looking at something like that with Fibonacci's. Nice pullback in that area, 38%, somewhere right around 116-ish, somewhere in that zone, 116.15. I would love that trade, but that top has to stay. If we take it down to a 1-hour chart, something like this, now you start to see our market dynamics, and I love that. I absolutely love that. You could actually move this Fibonacci up on the 1-hour and get a more aggressive type of entry point. So if you're going to do something like this, go right back to your Fibonacci tool here on MT5. Right there, that's going to be your spike low, and then that's going to be sort of your spike high. And if it was to hold, then you got an opportunity to bid somewhere. Man, that font is small. 116.20. I have 34-inch screens here, and I still can't barely see that font. So, maybe there's a way to adjust it. But that right there would be how you would trade the 1-hour. Bullish, though. Still bullish here on the intraday time frame. Let's go back over to our trading view and see if we can't sort of get a handle on what's happening to the Euro USD on these shorter time frames. Now, as far as your weekly chart, you can see exactly what we were looking at. Sort of this is a macro look at the technicals. Very bullish, but this week we did bounce right off of the 13 EMA, which is at 115.12. What's our low for the week? 115.25. Keep a close eye on that zone down there. That's key. But on the short time frames, what could we really be doing? Well, we can do a lot of different things. We already sort of showed you the Fibonacci's. Let's go to a 4-hour. 4-hour chart. We're driving higher. That right there was our ascending triangle. And I'm going to take a minute and sort of point this out because these are the things that a lot of traders miss. And we didn't check out yesterday's live stream. We talked about the ascending triangle here. There was sort of we ended it right in here somewhere. But we have one of these that's similar on the weekly time frame in gold. And all an ascending triangle is, or an ascending wedge, actually they may call it an ascending wedge, is that you just got a nice big run and you're just trading sideways and sort of tightening down. Guys, that's exactly what happened there. And that is really a very good illustration. If you wanted to extend this out, something like that, that's pretty good stuff. Now, these things are never going to be perfect. You're never going to be able to sit there and say, oh, it's a perfect flag or a perfect pennant or a perfect ascending triangle. Technicians will sit there and argue all day long about chart patterns and what they are and if that is one. I'm telling you right now, that is one. Now, the reason why, of course, is, it's easy to see now that the market broke, but it really does show there's your directional move to the bull, and there's just a period of sideways trade. There's no real reason to get carried away and think that it's anything other than that. 4-hour chart, pretty reliable there on the forex. So there's your break. But what I would say is this, and one thing that a lot of people miss, a lot of new traders miss, a lot of veteran traders miss, they sort of throw the baby out with the bathwater. They don't actually sit there and think, okay, I got an ascending triangle, or I got a double top, or I got a triple top. Why? And that's why I always come back to key levels. What's the most important thing right here? 116 flat. Look at all the tests of 116, compression, and then a break. That's key. Now we're printing 116.48. The biggest thing I would do right now is step back to my macros and say, okay, do we have any resistance up there to worry about? Not really. This is a bullish formation. I would be watching that spike high right there extremely closely, right up there about 118.29, something like that. Yeah, T Marine, I can't see that font either. Rather slight. I'm going to have to watch a tutorial on how to adjust the fonts. How to adjust the font on MT5, right? I have no clue. I tried it a couple times. I couldn't find it. So I'm going to have to do that. Maybe I'll make a video on it. Shane learns how to adjust his fonts. So that's what I would be saying there. All right, guys, a couple of other things that we got to look at here. The news, Trump raises India tariffs to 50% over Russia oil purchases. That basically is trying to pressure, Russia into getting a peace deal going with Ukraine. Peripheral action. That's a little bit of indirect pressure as opposed to just having direct negotiations. What do? You start raising tariffs on trade partners, and that's something we haven't seen. We haven't seen much of that. We've seen a lot of threats over the last few years, but that's an aggressive tariff. That's an aggressive tariff on India, so I don't know where that's going. My guess is there's sort of a slap on the wrist saying don't buy oil from Russia anymore, and if you do, then we're going to keep that there. I don't know. I think these tariffs are negotiation tools. Don't be surprised if that comes down in the next week or so. And then right over here, this one right here, Trump views foreign investment pledges as gifts. Trade partners say that's way off the mark. I don't really know where they're going with that, but Trump's trying to get some more FDI, some foreign direct investment going, and there's been an awful lot of it in the last 6 months, awful lot of it. Now, what are we watching closely? Switzerland. Switzerland is in a rare bind over U.S. tariffs. That's absolutely huge. We're watching the Switzerland situation very, 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 very closely. Now, what happened this week to the Swissy? We sort of outlined this area right up around 8102. You got a nice break right there. We had the break last week, and then we came right back this week. I still liked it. We talked about that USD Swissy yesterday as well. This was a pretty good trade, though. No question about it. Nice rally. This was the craziness of your NFP report. Nice two-way trade. Then we went right up there. We sort of failed at this zone, and then we came off right there at 80. Now we're trading about 80.66. I don't really know that we're bearish here in this pair, but our long-term technicals say, yeah, you probably need to have a downside bias. And that's absolutely what I think. As long as you're beneath 81, you probably need to be maintaining a downside bias. Now, does that mean that we're going to trend and go down and take out the lows that we've established this year? I don't know about that. I really don't. But what I will say is for scalping purposes, man, you got to sort of be a seller at 81 until proven otherwise. And that's essentially what we've done here this week. Lots of questions about NVIDIA. Then we'll cover one-click trading on MT5, and that'll be a wrap. NVIDIA right here, this is sort of hindsight's 2020, but I like pointing out these crossover trades. There was the 920 crossover back there on the 1st of May, and you can see what happened here. We had sort of the crisis, well, I mean, this was the January, but the crisis back in April, early April, the tariffs went down, and everybody couldn't believe it, and you saw a lot of stocks really get hit. But that rebound right there on the 1st of May, holy cow. I mean, look at that rally. There was your buy signal, and you just are absolutely killing it in NVIDIA. Your buy came across the board at 112. You're at 178. I mean, you're up, 60-something percent. I mean, investors are, that's what, the big, I don't know if you guys have ever been to an affluent area, but that's the houses with the gates, the big Ferraris, all that stuff. I mean, that's what that chart does for high net worth investors and high investors that have hedge funds that have hundreds of millions to pump into stock. I mean, this has just been a heck of a run right here for NVIDIA. So if we were going to look at it on these terms daily, I mean, it's just an uptrend, pure and simple. Can we buy up here? You could buy up here, but you missed the boat. You really do need to get a pullback. A lot of traders are waiting for these crossovers to develop here so they can exit their trade. That's a pretty darn good payoff right there for NVIDIA holders, though. Let's go right here, though. Monthly chart. If I was trading NVIDIA, what would I be looking to do? Well, if I wasn't already long from such a great level, I'd be looking probably just to grab a nice scalping entry using monthlies and spike low to a spike high in a pullback 145. You really couldn't argue with that at this point, or maybe even a deeper one to 62%, 123. Those are absolute slam dunk winners. Should we be any more aggressive than that with a stock that's rallied this far? We got global tariffs getting ready to go down August 7th. I would be smart. I mean, sometimes you got to say, man, we just missed the train, and it looks like we missed the NVIDIA train. But if you do get that deep pullback, hey, listen, maybe the tariffs throw a monkey wrench in the supply chains. Maybe all of a sudden the chip makers come under some severe heat. If that's the case, then we may be able to get a 146 long. That's possible. So the big thing to do is to be patient. That's for sure. Let me see. We got a couple questions here that I want to go ahead and cover. Let's go. T. Marina. Shane, can you give an explanation in layman's terms on your idea and understanding of fair valuing and when it's visibly seen and used in the markets? Yeah, I'll give you the quick and dirty of it. A fair value, and I'm not a big smart money concept trader. In the concept fair value gap, I hear people that have just begun trading that don't even really know how to, open their charts and really do much of anything, talk about fair value gap. Well, is that a fair value gap? Is that a fair value gap? When I came in, I was sort of schooled on the concept of fair value. And what fair value is, or a value area, is an area of price where price action just sort of oscillates and it sort of seeks a level. So like if you were going to dump, a bunch of water into a glass, and then you see that water seek a level at a given depth. That's how I view fair value. Now, fair value gaps are something completely different. Those are for smart money concept traders, and that's great. If you're one of those traders, that's fantastic. But this would be a good example right here of fair value. So you go, Shane, okay, you've got a 4-hour chart, we've got a 1-hour chart here. Euro USD pressing higher, hasn't retraced at all. But what about this down here? This area right in here. Somewhere in here. Is that fair value? And I would say, yeah, it is. And I'll show you what I mean right here on TradingView. If you go here, Euro USD, let's go 1-hour chart. This area right in here, that would be a fair value. To me, that would be an area of fair value. So Shane, why? A couple of things that jump off the chart at me. Number one, look how small the price bars are. Okay, that shows that you've got really a war going on between buyers and sellers. Nobody's really winning. That's the first thing it shows you. Number two, is there a key number in there that's being debated? Well, we could say 116, but not really. More like 115, 115.80, something like that. So this area right here would be absolutely fantastic to really establish sort of an area of fair value. That's what I call fair value, or a value area. That's when you get a period of sideways trade. Typically revolves around a key number, but it doesn't have to. You see a lot of the bodies of the candles overlap and very little deviance from the area itself. You get a little sell-off there, but you pop right back up into that area. So to me, that's what fair value means. Now, there's smart money traders out there going, you don't know what you're talking about, and that's fine. Listen, I was brought up in a different era. I understand that stuff's in vogue right now, and if you're trading it and you're making money, that's fantastic. That's absolutely great. For me, I think a fair value is an area that we're doing a lot of business and we're establishing a price. Now, I'm going to say one more thing about fair value, and typically this has to do with the futures markets. Let's go right here. That's not the gold chart we want. How about this one? Okay. You know what? Let's go to our NQ chart. 30-minute NQ, which is NASDAQ, all right? Now, you can see the volume here, right? You can see the volume and all that stuff. This is something I've talked about in the past, but I don't know whether really to get into it right now. Time price opportunity, or a TPO chart. All right, a TPO chart is like a market profile chart. And what you're seeing right here is you're seeing the different price points that we're doing the business in, the volume in. Now, when you see that, typically what do you get? Typically, you get an area of fair value. Take a look at this. It's no accident that you're doing all this business right here, and you've got these price bars that sort of all overlap, and you're really getting a compressed market. I would call that an area of fair value. Now, this right up here, I believe, is going to be the top of our range, and here's going to be your point of control. Point of control is where you did a tremendous amount of business. We're going to talk about that later, but for right now, actually, I do believe this dark line is going to be your point of control for right now. Look at all the volume that's occurred in this area right here over the last 90 minutes in the NASDAQ. That's where the majority of the volume is in the market right now. It's right at that price point, and that would be your point of control, which is 23,366.75. That area, I would call an area of fair value. Why is that an area of fair value? Because buyers and sellers they're doing business. Folks are coming in. We're throwing down. Some folks are buying. You're selling, whatever, but the market's not moving. That means you've found a balance. You found an area of pricing balance. It's equilibrium, at least for the moment. That's how I would describe fair value. I haven't got into the time price offering charts at all. I haven't really talked market profile. I was actually brought up as a market profile trader based on Stadelmeyer's work back in the 80s. I don't know that it's appropriate. It gets really advanced really fast. I could show you a couple patterns typically. This would be an uppercase B pattern. This is one of those that we would look for, and what it looks like is a B. Okay? So you've got sort of an uppercase. That's not very pretty, but essentially what I'm saying is there's a gap in here. So if you do sell off maybe later in the day, this gap area will be filled in. That's one trick on market profile. I just need to be able to draw it a little bit better. Maybe we'll do something like that. Maybe we'll do a clinic on MPO or time price offering charts and what exactly they mean. All right, we got one more thing here, and then I'll answer the rest of the questions. I was asked this question, and it was a pretty good one. Shane, I don't have the buttons on my chart that you have. Well, we got a thing on this MT5 platform called one-click trading. And all you've got to do to turn on one-click trading is go ahead and right-click on your chart, click on one-click trading, and it's going to go ahead and bring up your asks and buys up there. It's going to have your spread. You can determine your size, whatever you want to do, and you can go ahead and step up. You can sell the market, and once you step up and push your buttons, you're going to go ahead and you're going to have your trade right here in your trade monitor. It's going to pop up right there automatically for you. So that was one of those that I did want to cover because it's a real simple tool, but it's something that not everybody knows how to use. So if you don't like one-click trading, those are market orders. Right-click. Boom, go ahead and click that. If you want to turn it on, just right-click it again and hit one click. And there you go. And if anybody knows how to adjust the fonts on MT5, be sure to let me know there. All right, everybody. Let's see. We got a couple more questions, and we're going to sign off here. I hope I got around to all of them. Let's see. Okay, so I hope that helped Team Marina. Yeah, Shane, I see a bit of that too. Okay, let's see. Team Marina. Okay, so buyers and sellers aren't indecisive or battling over price, but more agreeing on the same price. They're not agreeing, but there's a balance of them. Okay, so I don't know. North American hockey, if you guys are hockey fans, if there's penalties, a couple players go to the penalty box. Then one team has, let's say, 5 players out there, and then the other team has 3 players. Well, I mean, that's going to be an advantage. These players are typically going to dictate action and push the ones with fewer numbers back. Price works real similar to that. If we have an equal number of buyers and equal number of sellers, everybody's buying and selling in there. Everybody's buying and selling. The buyers are buying because they believe the price is going to go up or they're exiting a short position, whatever. Sellers are selling because maybe the top's in and maybe they believe price is going to go down. But when you get that stalemate, when you get that area of fair value that develops, the buyers are really fighting with the sellers, and they're balanced. So that doesn't necessarily mean that, okay, there's 5 buyers and 5 sellers. What that is like, okay, we've sold, we've bought, 500 contracts and we've sold 502 contracts. So the price action gets very, very tight around an area of fair value or your point of control right there. That is the area that really is dictating what the market's doing. And it's doing that because there's a tremendous amount of business right there and it's balanced. So the number of contracts being bought is roughly equivalent to the number of contracts being sold for whatever reason. And what happens is price doesn't move. That process of price discovery doesn't kick off. You get big directional moves when your markets are out of balance. When you get a bunch of buyers or a bunch of sellers, then you get those big moves. But when you get into one of those areas of fair value, I call them rotational markets or sideways markets or flat markets. Boy, they're really challenging. They're really challenging, especially with crossover strategies or any type of breakout strategy. Hope that helps a little bit. All right, everybody, I'm going to go ahead and sign off here for a few hours. We're going to be back on all of our channels tomorrow. Should be a pretty good one. We're going to go ahead. We're going to trade the Bank of England fallout. So we're going to be looking at the Great Britain pound USD. And that comes to mind. I did just forget to do the Great Britain pound, didn't I? All right, let's look at it real quick. Great Britain pound BOE coming our way tomorrow. We're looking at a situation where potentially you're going to get that rate cut. You're going to get that you're going to one of those rate cuts of about a quarter point. That's what we're expecting out of the BOE tomorrow. I'll be back at about the same time. We're going to trade all the fallout with the Great Britain pound pairs. But you're absolutely right, Alan. You pointed this one out earlier today. You're seeing right there 132, 133, 133 bids. That's a perfect accumulation trade right there. Let me see, Alan. Supply is meeting demand. Absolutely. That's another way to put it, supply and demand. Absolutely right. Supply is meeting demand, and you get a state of equilibrium. For those of you that want to be economists, the state of equilibrium. Boy, that brings up micro and macro econ classes back in college, survey courses. Those are miserable. I don't know. it's funny that the older you get, you realize that economics in general is just all theory. It's all theory. Nobody knows what's going to happen when these tariffs come down, how they're going to impact things moving forward. There's some guesses. Trump's got his guesses. People that don't like Trump have their guesses, but nobody really knows how it's going to play out. It's all theory. It's all theory. Is there a key level on the board for us? Great Britain pound USD that we should be aware of? Let's back off to a monthly. We've sort of already bounced off of our support zone right this minute. There's your daily. I can build a case to say maybe from here to here, but this spike high back on July 30th, you're probably going to take that out. I think you're in a firm buy here. I really think you're in a firm buy. So what could force this market higher? Of course, no rate cut. No rate cut out of the BOE. That's going to force it. All right. What else? Hawkish sentiment. Maybe that vote isn't 8-1. We're expecting the Board of Governors to be at right around 8-1. If it doesn't come in at that could force this market higher. What about forward guidance? When these guys show up and say, well, we don't think we're going to cut for a while. I think you're better off being long right now. But, long from your 920. 920 is growing on me, guys. Love the 4-hour time frame. Love the daily time frame. 4 hour for forex is pretty strong. All right, everybody, I've gone on long, and man, these streams are getting longer and longer, but that's great. I love the engagement. I love the questions. I think that that's what this is all about, is trying to interact and answer any and all questions that I can. Couple of rules. If it makes money, it's the right answer, and if I don't know, I'll tell you I don't know. But there's definitely a lot that we can go over, and it's much more than just trade ideas and key levels and things. What's our U.S. oil trade doing? 65.12. I don't know. That would have been one where you bank the 70 pips and roll on to the next one. Let me see, Alan. I just moved my stop to 133.45. Yeah, 1-1. Going to let it run from here. There's nothing wrong with that. That's not a bad way to do business. Right in there. Nothing wrong with locking in a little bit of that. It was actually a pretty cheap trade too. It wasn't expensive. I mean, you could see, that's why I don't like putting the stop loss right up there, especially on shorter time frames. Maybe on a daily you can do that, but you can't get away with that on short time frames. Down in here might be pretty good. Just got to wait and see. That swing low right there is beautiful, though. That's a great stop loss area. Just came about 4 hours too late. All right, guys, I'm going to go ahead and sign off. Thanks for joining me today. We're in for the BOE. That's going to be your big market driver, and I think that that's going to be probably our key focus. We'll look at the FTSE tomorrow. We'll look at the Great Britain pound, Japanese yen. We'll look at the Great Britain pound, USD, and we'll keep you posted on how this U.S. oil trade pans out. But man, I think the best might be over. We just got to wait and see what happens there. Let me see, T Marine. I think I get that. Fair value loss is when that winds up breaking. Yeah, as soon as you get a breakout. And listen, that's the way markets work. I mean, just right back to our chart here. Essentially, what you see is periods of run and rotate. Okay, so you'll get like a bearish run right there, a bearish run, a little bit of rotation, then a bullish break, and then what did you get there? Rotation. Run, rotate, break. And that does go back to Stoudemire's market profile theories from the 1980s. He built those out in Chicago. He's a commodities trader, built those out at the Mercs, the CME. My uncle actually was working with Stoudemire for an extended period of time back in the 80s developing. He didn't develop the theory, but they did essentially. That's how everybody was trading in the pits at that point. So price would go into an area of fair value or balance, equilibrium, and then it would break. And then after it broke, it would establish another area of fair value or equilibrium. And that's essentially how markets work. They go flat for a while and then they move, and then they go flat for a while and then they move, and then they go flat and then they move. That basically is the thesis behind your Elliott wave. It's behind all of it. So just remember that an area of fair value, market's going to move, but when you go into fair value, it can be tough sledding trying to trade breakouts when the market's flat, and you don't necessarily want to do that. All right, everybody, I'm going to go ahead and sign off here for a while. Absolutely great session, guys. I appreciate all the engagement and the questions. That's exactly what these webinars are for. So if you have any more questions or anything that you need taken care of, head on over to How to Trade. Send me a private message. I will be sure to get back to you. I always appreciate those and answer them in good time. Just remember the BOE is the key event, so your Great Britain pound pairs and your FTSE 100 probably going to be on fire. You're going to see some increased volatility there. Tomorrow we'll recap the pound. We'll be looking at the pound across the board, and we'll just see. We'll see what we'll see. We had a few picks to click out in the Switch Markets newsletter, so be sure to check those out ahead of really ahead of this BOE announcement, which for a quiet news week is probably our big event. All right, T Marine, I'm a victim of the flat market. Well, flat markets get everybody. They've got me from time to time. One of my biggest losses ever, I was trading gold futures back in 2013. The market was flat. I was trading a 30-minute chart, and I had double compression. And I said, oh, this market's going to break. This is a lock. I ended up losing my tail that day. Markets don't have to move. They don't have to move. All right, that's enough for me. You guys have a fantastic trading day. Trade the action well, and we'll talk soon. See you.